Hi, guys. We are live here for a great panel. We are very excited. I've got a great lineup of guests here with me today, and we're going to discuss the topic of insurance. I am going to, in just a minute, hand it over to Danny Bozzuto, who's the co-founder and president of operations for Cannabis Connect Insurance. But before I do, I want to briefly just introduce our other esteemed guests, some of whom I've known for a long time, some of whom I'm getting to know better now. And I look forward to working with any and all of you in the future. So we also have Michael Bondurant, the President and Chief Strategy Officer for Bluma Wellness, also known as One Plant. Thank you for joining us today. We've got John Paul, the CFO of Plus Products. He served as the CFO and consultant in many fast-paced industries, but had no idea what he was getting into when he plunged into the cannabis industry. We're looking forward to hearing more about that today. And then we have David Rahn, the VP of Account Services with S2S Insurance Specialist. Been getting to know the Rahns a lot more so recently, and looking forward to working together more with you guys here. And so without further ado, Danny, if you want to kick it off, and I'm excited for the panel, and as much as you want to kind of participate, I'd love to have you all talk a little bit more about yourselves, give a little bit better brief background on how you got involved and what you're doing now than I did, and then we'll kind of go from there. But thanks again for joining us. We appreciate your time, and should be a good one.
Yeah, thank you very much, and hey, thank you everybody for joining us. I think it'd be great, yeah, if we did a little bit of a intro on what got us into the cannabis industry. I think that'd be a lot of fun. David, how about you go first, and then Mike, and then John?
Sure. My name is David Rahn. I'm the VP of Account Services for S2S Insurance Specialist. I've been in the insurance space for close to 4 years now. Before that, I have a marketing and PR background. I've worked with major companies like Subway and Saks Fifth Avenue. And then I moved over to the insurance space, starting in specialty risks in the marine lines, and then going straight into this wonderful regulated business that is the cannabis and hemp industry. So what I like to, someone cannot hear me? What I bring to the table, especially for my clients, is I like to lead them through the entire process so they have a full understanding of what they're getting covered, how they're getting covered, and the steps in between to make sure that, you know, their claims are processed in an effective manner and that they get paid out if there is a claim to happen.
Thank you.
I've taken my my brokerage and I've made it more cannabis focused. Is basically what I'm saying.
Thank you very much. And Mike?
All right, thanks. Appreciate it, Danny. Mike Bondurant, I'm the President and Chief Strategy Officer for Bluma Wellness. Bluma Wellness operates a license under the name Three Boys Farm, but also does business as One Plant. That's our brand, which is in Florida. We currently in the Florida market, it's a vertical market, so we have obviously a grow facility, a garden, which is up in Indiantown and one in Ruskin. So I was in Indiantown actually this morning. We have 4 locations throughout the state, and we have statewide delivery already. And my background, when this license traded hands about 2 years ago, I, along with Brady Cobb, who's the CEO, we were both able to take this license and start the ball rolling. And Florida is a very fun state, and insurance is a huge piece of what our day-to-day business struggles and sometimes successes might be. So looking forward to it and answering some questions. Thanks so much.
Thank you. And John?
Yeah, thank you, Danny. So, yeah, I got a call from the brother-in-law of the chairman of Plus Products a little more than 2 years ago, about 15 dog years ago. And they needed help going public. And I said, yeah, great. It'd be fun to work on another public offering. Had no idea what I was getting into in the cannabis industry, but dove right in. We got them public. Plus is one of the leading producers of edible gummies in the state of California. It also has operations in Nevada, as well as the CBD line. And you know, it's been an incredible journey. And after I got the IPO done, I took over the insurance area, and had a few surprises along the way.
Yeah, thank you very much, John. And lastly, my sister and I actually, 4 years ago, we decided to co-found Cannabis Connect Insurance. She's down in the San Diego area of California, and then I'm up in the Bay Area. And pre-adult use, we saw a need. Our construction division was doing work with some of these up-and-coming dispensaries, and we saw that they were just lacking in insurance and lacking in the service and support that they deserved. So we decided to huddle up and jump in and just help them out and get that company or get those companies their right insurance. So with that, let's kick it off. And, one of the first things we always talk about and we like to go over is, considering the stage of your company and weighing the budget versus coverage, because that's always a big issue. Money's tight. And so why don't you all give me some feedback on how that conversation goes at what stage of your company and how you look at the budget?
So I've really started a lot of these conversations with a lot of potential clients who are very much in the infancy of their operation. They really want to know what sort of quotes they can get without even having to start. Now, sometimes that's not really the best position to be in. You really need to look deep within yourself, deep within your business, and see how you're really going to perform that upcoming year or that first year that you're in inception. And all these insurance quotes and all of these insurance policies are performance-based. They're all performance rated. So you really need to see what your projected revenues are for that year. If they're low, you might have a lower premium. If they're high, you're going to have a slightly different premium. And that's the kind of thing that I see, especially when my clients are starting to get into what the insurance that they're looking for.
Mm-hmm. And John and Mike?
Well, I guess, John, if you let me go, and by the way, John, I love your products, so really appreciate that. Just wanted to throw that out before we got started. I meant to say it earlier. For us in a vertical market, we really have a wide variety, and I probably meet with our insurance agent at least once a week, if not twice a week. Some of the things that we're having to deal with, general liability for our grow operation, general liability for all of our stores and dispensaries, for our corporate offices. I have workers' comp, which is significant as well. We have a pretty robust delivery service, and then also distribution out to each one of those hubs. So for us, the full spectrum of insurance, all the way to employee coverages through our employee benefits, it falls in our lap. So from a budgeting standpoint, we haven't really had the opportunity to go and budget out an entire year with all these expenses because we're still growing. But I can tell you it is a huge slug of operating expense for us. And that's probably the reason why we go out and speak with our agent every single day in anticipation of knowing that coverages are limited, carriers tend to be few and far between. It seems like a number of them have left the marketplace. But that being said, we do have to have these coverages in place. So it's a bit of a game. I think John mentioned earlier that cannabis has been an interesting change for him. I share a lot of those same sentiments. I came from banking for almost 20 years and then running a logistics company. So if it has insurance attached to it, it's actually in our portfolio from a finance standpoint.
Yeah, I think the things of a stage in a company are very important. When you're just starting out, you got a lot of risks right off the bat. So I'd say, if you got a lot of operating risk in the business, not sure if you're going to make it or not. Now, it's always a lot of work to get things off the ground. Well, you can't afford to take financial risk and get, played too tight with insurance. So it's not a position to self-insure too much, but then at the earlier stage, you're probably not, there may not be certain coverages you're going to need quite yet. You may not have a formal board. Maybe you don't need D&O, although I would still highly recommend it. You may not have enough people for employment practices, but your needs are going to change over time. And I think, the big thing early on is to make sure you have a broker who really understands the cannabis industry, because it is so very different. Usually there's not as many carriers that will underwrite your particular coverage, and carriers are dropping in and out. So you really have to work with somebody that knows the particular market and has the kind of connection.
Yeah, just to echo what John was saying, is you really do need to have a knowledgeable broker, because there are some insurance carriers out there that are nationally recognized, and they might not be covering cannabis or hemp at this point in time. And your broker may or may not know that. You need to have somebody who's been there before, who either A, has a background in insuring in regulated industries, whether it be casino gambling, whether it be pharmaceutical, whether it be alcohol and tobacco. That is always a great start, and the kind of brokers that you kind of want to deal with is someone who has seen this song and dance before. That's very important, and especially along the line, no matter where you are in the seed to sale supply chain for cannabis or for hemp, it is important to have these coverages. Whether you're starting small with something like general liability or cyber liability, and then moving up to insuring your equipment, to insuring your employers, and then your employees, and then your directors and officers. You need to start somewhere. Not if you want to start small or start big, but you need to start somewhere when it comes to mitigating your risk, or else it's just going to blow up in your face.
Yeah, exactly. Yeah. Small, especially if you're a startup, you need to be nimble with the insurance. If your product's not out to market, you want to time your insurance with when you're either launching your product, so you're not buying product unnecessarily. You're not buying like product liability before your product's actually an exposure. Exactly. Same thing like John was saying, if you've got a tight company culture, there's not a lot of employees, may not be the right time to spend that money on EPL. Maybe better invested in, again, growing that company. And when you hit that certain number to where the culture is a little harder to hold on to, that you do pick those things up along with building out your HR and other risk management tools. So with that too, one of the areas we talk about that's not a direct piece of insurance, but something that's very important, is when you set up contracts with vendors, and the importance of negotiating the insurance requirements from your vendors, and why is that important. So with that, we talk about mitigating risk and managing risk. John, do you want to go ahead and start us off on that?
Yeah, I mean, you may come into a particular situation. So for example, we're moving to automate our production lines, and the equipment happened to come from England, and the terms of the sale were FOB England. So now suddenly we had a need for cargo insurance, which did not come up before, and it wasn't necessarily going to be an ongoing need, but we need to get that. And then, certainly as depend too with other suppliers, we also did look at possibly doing a venture with a oil supplier. And so now that brought on some new insurance requirements for us. So, as your business changes and you're developing new relationship with parties, you have to look at, what are the insurance ramifications, and that too, I think not only do you want to have a broker that knows the cannabis industry well, but you have a broker that can service you well. Because things move very quickly in the cannabis industry. And can your broker move quickly enough to keep pace with all the changes?
Yeah, the thing with the handshake agreements, everything is good until it's not good. So, you want to really be a stickler on the contract language. And Mike and David, I know you both have a ton of experience on it too, I'm sure.
Yeah, the only place where we're laying some of that risk off is with some of our builders. So whether we're building the garden or doing some construction over on our existing farm in Ruskin, or with the dispensaries as we're building those, we lay some of that risk off, and there is some liability that's assumed by the builders in those instances. Other than that, though, most of our manufacturing, I'm not really in a position where I need those resources, or I'm able to go ahead and negotiate those resources from those other vendors. So I think my area is a little bit unique to this, and probably a little bit more limited than would be the case with John.
Yeah, I mean, I see a lot that, insurance issues are really driven with contractual obligations. What you see in those contracts, you really need to follow. You need to make sure that you have the right COIs for the right year. You need to make sure that your broker is communicating with your underwriter to make sure that if there are any changes to the policy or there are any changes to these contracts, that everybody's in sync, that everybody's in communication. Because if there's a claim and that wasn't addressed in a contract or in the formal agreement, you can have problems later down the line, and that's not good for anybody.
Yeah, and one of the key takeaways is you want your insurance to pay for problems that you've caused. Right. And you want your vendor's insurance to cover you if they cause a problem for your business. Absolutely. You definitely want to spread that risk around. You don't want to make your policy have to pick up a problem where a vendor damages your building, maybe injures somebody in your area. You don't want to have it where it falls back on you because your contract language was insufficient and their insurance gets off the hook. So you want to make sure that your insurance pays for what it does and theirs pays for theirs.
Exactly.
So one of the other hot topics, there was a lot of pieces of it in the news the last few weeks, was directors and officers liability. There's been a lot of activity in the claims segments. And one of the key takeaways, besides the fact the market's limited, it's costly, is what are some ways, as a broker or as a business owner, you want to manage your D&O risk? I'd love to hear, all of your viewpoints on that too.
Yeah, for us, I mean, so after Plus went public, I started getting involved in more areas, and one of the first was insurance. And first going I came across with that we had private company insurance, but didn't apply to us as a public company. So we had to scramble and get the public company insurance, and D&O insurance was obscenely expensive and dwarfed the cost of all our other insurance combined. So I mean, it was roughly about a $500,000 premium for $3 million of coverage, and that's on top of a $2 million deductible. So extremely expensive. It's tough market. Not many carriers are involved in there. There's really one big carrier that dominates the market, and and in fairness to them, they did keep the rates about the same for our renewal earlier this year, but they're also they're very selective. They came out and visited us, and they said we were one of only 3 companies that they would underwrite in California. So it's not just the D&O insurance, but you have to think, particularly if you're a public company, you really have to take a hard look at your investor relations practices. And I think there are some companies out there that were very aggressive with their forecast and, setting up very high expectations and, just asking for difficulties, when the valuations in the market turned south there. Plus we tried to be very conservative. We want the analysts to own their own forecast. We don't put forecasts out there. And we'd rather under promise and overperform.
John, I think you stole most of my thunder there.
Yeah.
Yeah, we're a publicly traded company as well, as of June the 15th. So.
Oh, congrats.
Yeah, I can echo a lot of John's positions there. There was a number of false starts that we had with some carriers that were interested in carrying D&O for us. But really the best way to mitigate, whether it's D&O or just your general liability, is best practices. And again, don't overpromise. We try to be very conservative in what our numbers might be. As a as a company that grows its own product, we have to always expect that there could be some type of a failure throughout the system. There's a lot of testing that takes place in Florida. So for a myriad of reasons, we tend to be very conservative, but while we're conservative, we're letting people know that, you know, this is what our policy is going to be going forward. We're going to deliver very good medicine within the state of Florida, but we're going to do so in a very managed and responsible way. And if that's what we continue to do and echo it throughout the enterprise, we should have fewer issues that are really self-inflicted wounds. And those are kind of some of the terms that we try to avoid, you know, within the organization right now. So I think most of my issues are very much in line with what John's deals with.
Yeah, just to echo with Mike and saying best practices, I mean, that is the best way for any company, especially in this industry, to just start. It's not only is it tricky business, but it's also risky business. I mean, that's why we're all here today. By following those best practices and, you know, keeping a tight belt, you know, especially in this day and age, you know, especially for the companies that don't have D&O insurance, because they know the challenges it comes with finding the right placement and finding the right coverage. But also, D&O insurance is one of your most effective coverages at the end of the day, because you really don't want those legal defense fees. You don't want all those legal expenses to come out of your cash flow. You'd rather have it come out of your insurance policy than, you know, out of the company's pocket. That's where you want to find it. I mean, or else out of the end of the day, you might not have a great experience after the end of your claim with one of your directors or officers.
Yeah, and that's the challenge. I mean, the challenge with D&O is it's what we call in the industry a severity-based type of claim. Typically, claims aren't very frequent, but a cheap D&O claim is 6 figures. So they're always expensive. And in this space, there's been a lot of growth. And like John and Mike and David were saying, some over-promising, over-forecasting. So we're having a high frequency going with this, which has made the market very upset. Something really important to work on too, if you've ever served on a board, the last board I was on was having a great relationship between the board and the executive director, the staff, you know, having good communication between the two, not having a board member that's not fitting the culture or not having executives that don't fit the culture. Because
Right.
If you have a disgruntled board member or disgruntled executive, it's like a ticking time bomb. And so you really want to be selective in who's on the board, because they need to be one vision, you know, really fit that kind of family culture that you want in your board.
Absolutely. And I mean, you know, we've seen some of these companies, and you know, they're still here today. We're not going to say names or anything, but sometimes you might have, you know, a few charismatic members on that board, and they can really, you know, sink your company pretty fast if they don't know what they're doing.
And David, I got a question from the audience. Go ahead and I want to shoot it your way.
Sure.
Jeremy's asking, you know, what are the primary drivers when it comes to workers' comp rates, and what are some common accidents and claims you've been seeing in the company and across the industry?
So, as far as workers' comp claims I've seen, it's just, you know, they are kind of few and far between. What I've seen, especially from the insurance that I deal with, is, you know, bartenders or dispensary employees getting injured on the job in one way or the other. I've seen it as basic as that. I've seen, you know, processors, you know, with, you know, faulty equipment or something like that. Though they are few and far between, you know, knock on wood that, you know, we're not seeing any more of them. But a lot of these drivers for workers' comp insurance is that, you know, you need to hire a lot of employees, you know, especially where you are in the supply chain, whether it's in cultivation and processing, you know, that demands a high workforce. And you need to make sure that those employees are protected, you know, whether they're out in the sun and out in the fields or in the grow house or something. You need to make sure that your workers are just as happy and just as protected us if they were in any other job. We're trying to make this industry like any other regulated industry. This is a young industry and really don't have a lot of claims data yet to really show what workers' comp is really looking like. And hopefully within the next few years, God willing, it'll still be the same because the claims won't be there and, you know, the industry is doing great. But it's something that people really do need to focus on, especially, you know, since this industry is attracting a very much demand in employment and into this workforce.
Mm-hmm. Yeah. And Jeremy, the main cost drivers for workers' comp, if you're a brand new business,
yeah,
there's not as much control. They take a specific dollar rate per $100 of payroll based on the type of work being done. There's a class code assigned to it. So they'll take that, they'll charge that for every $100 of payroll. And then there's a factor called an experience mod. It's another, you'll hear people also call it your safety rating. New businesses it doesn't really come into play. You start out at a 1. As your company grows like John's or Mike's, it becomes a significant factor for controlling your costs. If year over year you have low claims and high payroll, that number will go down and you can start seeing 10, 20. I mean, I've got clients who get 40% credit because of their safety right off the bat from their workers' comp. So that is the stablest and most long-term way to control your costs. And it's really the one that the business owner can actively control, because the market, you know, you can't always control that. If all the carriers decide to raise their rates, you can't do anything about that, but they all have to honor your experience rating and they all have to give you that credit. So that's the one piece as a business owner you can control.
Yeah, I think so much depends on the state that you're in, because the rating can be very different. We, fortunately in California is one area we've seen tremendous headway. We went from like a rate of about $17 per thousand down to maybe about $6 or so per thousand in a couple of years' time. And yeah, David and Danny had said, I mean, so much depends on your practices. So if you have good safety practices, you have a good track record within your company, that helps out a lot. You know, another thing is looking at, you know, how are your people classified? Because the high rates are in the manufacturing operation and not as much for clerical and salespeople. You know, in California, unfortunately, we are still put in the food processing class. However, I like to think, having been in the pharmaceutical business before, I mean, we're closer to pharmaceutical grade. I mean, I can't imagine Raisin Brands as fussy as how many raisins go into each group of raisins, as we are making sure that each gummy is 5 milligrams. You know, we have to be very precise about that. So in many respects, I mean, our quality practices are much closer to pharmaceuticals, and their rates are about a third of what we're paying. So hopefully more recognition about that over time.
And, you know, California, New York, Florida, and Texas, they all kind of compete to see who can be the most difficult with the insurance. So I know a lot of our viewers are in Florida. Sorry about that. It's, you know, it's another rough state.
Yeah, for our manufacturing, you know, we had a safety officer come in from a very well-established national company to help us in writing some of our procedures within our manufacturing group, and so we received some benefit with regard to workers' comp. And then I think another important aspect is there's a lot of transient folks still within this industry that are moving, you know, between dispensaries, between manufacturing, between grow operations. And some of those people come with great attributes, and some of them come with a little bit of baggage. I think that that's probably a part of every industry. But part of our screening of employees and finding out whether or not they've had issues in the past, for example, you know, have you ever had a back injury, and asking some of those questions during an interview in a way which is not obtrusive, but gives us an idea that we can't put someone in the garden that, you know, can't lift 10 pounds because we are going to have a claim. So again, these are those self-inflicted wounds that we try to avoid if we possibly can. And and just knowing who our employees are and making sure that they're placed in safe conditions with all, especially with COVID now, with all the PPE that they might need. So again, it's mitigating at first within the organization, and then practices around that for the rest of the group, tend to minimize the claims that one might have.
Yeah, Mike makes a good point about the hiring practices. I mean, unfortunately, I've seen, there's been cases of people that really don't want to work and they would just like to trigger a claim, and then they're getting, and
Take another vacation.
hang out for 3 or 4 months and just collect money. And yeah, you have to, be careful. It's easier said than done to try to screen those folks, but.
Yeah. Yeah. And so another point to bring up too is what strategies do you use to either as the business owner or the CFO budget for your insurance? And then as the broker, what do you do to help your clients budget for the insurance?
What I do as a broker to help people budget for insurance, especially since now in this day and age, a lot of these CBD companies are not really opening up brick and mortar establishments and are just going to straight e-commerce and online stores. They are definitely at more risk, especially from the cyber side. So really their cyber liability becomes their new general liability. And that's definitely something I can, for those companies, like to focus their budget more on having a basic GL policy, and then also having a strong focus on their product, if they're actually selling a physical product, or if they're part of the supply chain, having their products covered as a completed good, which is another thing to really focus on. And then lastly, the equipment that you want to cover, and then going towards your workers' comp, your professional, your hired non-owned auto, all of the supplements and all of those other specialty risks are something to focus, maybe later down the line when you're not quite there yet. But if you're there, then it's definitely something in the discussion that I like to have with my clients in making sure that their budget is balanced when it comes to their risk exposure.
Yeah, I think one of the challenges when you have a high growth company.
Yeah.
And you're going 2 or 3x every year. So like at Plus, we went, from $1 to $8 million in revenue early on. So what do you do the next year? Well, if we were pricing our insurance out on 8 times more growth, we would have gotten fabulous rates, but we would have overpaid because we still grew nicely 2 times, but it wasn't the same as, So to me, that's one of the more trickier things. I say when you may take what your forecast is, you dial it back a little bit, and hopefully you can at least, you've got a level you're pretty comfortable with that you're 90% sure you'll at least exceed that amount. And then perhaps if you see that sales are taking off midstream, you can perhaps try to renegotiate. But
I echo your sentiments, and John, in a growth business, I look to ensure that every opportunity to cover risk with insurance is met, and then it becomes a balancing act on that particular day as to whether or not it fits into your budget and whether or not you're tolerant for the risk and the expense that's associated with it if you fall short on your insurance. And for 2021, we're actually looking at doing a captive. I think that we'll have the free cash flow to avail us of that. So kind of a different mindset. Obviously the D&O would fall outside of that, and a few other insurances would fall outside of that, but working towards a model of self-insurance is something that we're looking towards in our business.
Yeah, there's a lot of tax advantages with that too. And if you can manage everything, it works out well. Something I like to do with my clients, it's a carryover from some of the other industries we work with, is your carriers will disclose the rates they charge you for most of the types of insurance, whether it's per, let's say it's per $1,000 in sales. Right. So in John's example, we do a 3-month, 6-month checkup and we say, okay, hey, we're trending towards $8 million in sales. So we can talk with the carrier. We know, let's say if you're getting charged $2 rate for every $1,000 in sales, you can take the difference between what you estimated with the carrier and your actual and start to figure out what this final audit's going to look like, what these charges are going to look like. And if you do them early, again, 3 months into the policy, 6 months in, the advantage there is carriers, they'd much rather break up that payment and make sure they get paid than try to send you a bill at the end of your policy for some huge sum of money and say, oh, pay us in 30 days. They don't want to do that. They'd rather work with you on it. And that's, what I like to do and what it's a good practice is if you know you're going to pay $2 for every $1,000 in sales and you've got a salesperson closes a new deal for $200K, you can bake that $2 per thousand in sales into your pricing. So that way, when you start winning new contracts, you're baking that insurance cost into your offers, your orders, your sales, whatever, so that every sale is paying for that overhead. And you're not looking at the end of the year of making all this extra money and you have a bill that you did not set funds aside for. And you have sticker shock and a cash flow issue, as opposed to really baking that cost in, whether it's at the retail level or at the wholesale level, and trying to cushion yourself. And again, that's where we've all echoed the constant communication. And another piece where John talks about not overestimating, that's a great point, because carriers typically, especially on the liability side, not the workers' comp, they don't give money back. They just keep it. Yeah. It's part of the contract. But they will take extra money if you underestimate. So if you think you're going to do 10 million and maybe it's a stretch goal, if you come in at like 9 million, you might be able to do the best of both worlds. You can secure a lower rate for having a high volume of sales. And hey, if you do better and you end up closing 10 million instead of 9, you know what you're going to pay. And you've got that baked in already.
I like what Mike says too, is you look at and say, where can you afford to take on some more risk? One area can be, for example, with medical. May you get to a certain number of people and you have a fairly healthy population and you don't look like you're going to have exposure with big claims. Well, maybe you can move to an administrative services contract where you're in essence covering the base level claims, and then you just get catastrophic coverage for amount over that. I've done that in workers' comp at prior companies where we would take on the first $1 million of risk and we just got excess coverage, and it saved an incredible amount of money. And I think what Mike's talking about with captives, and that's where you form your own insurance company, or maybe you participate with a group, and then you can be putting the premiums away and you can be building up a reserve over a period of time. I think there are starting to become some cost-effective solution there. We had looked at it maybe about a year or so ago, and it seemed back then the setup fees were pretty expensive and it was pretty hard to do as a single company. And then they said, well, you'd have to invite a couple other cannabis firms into your captive. And we looked at it and said, we're not sure anybody that we bring into the party, So, but I think that world is changing. So, I mean, it's something for a bigger company, but when you get to that point, I mean, I would think a lot of MSOs ought to be looking at captives if they're not already.
Mm-hmm. Yes. And with that, I know we've got another area to bring up. David, you mentioned it briefly. While a lot of industries have moved home, cannabis is still considered essential in most areas, so they are working, but we have seen a large uptick in cyber type claims. And so as a new business owner, do you believe that new business owners or even mature cannabis business owners should be concerned with cyber liability, and why?
Absolutely, yes. We live in the 21st century. I would say a very vast majority of our business is now done electronically, even though we are a cash-based industry, which is still very mind-boggling. It is so very important to make sure that not only customer information, but patient information, especially if you're in a medical state, HIPAA laws, and also transactional information, Bitcoin, all of that stuff is done through the tubes. And you need to make sure that you are covered. I mean, your website is like your brick and mortar now. You need to make sure that that thing is secure and locked down and is not leaking out any sort of important or potential information, or, you know, on the receiving end of a cyber threat. You need to make sure that your cyber liability policies are put in place, and you just can't just rely on your firewall or on your antivirus software and things like that. All those tangibles are very great and are very effective in the techno space and on a daily course of business. But at the end of the day, in order to facilitate and to make sure that you get paid in case you have a claim, you really need to have cyber liability insurance. Social engineering, wire transfer fraud, I mean, the list runs endless as far as all the cyber exposures that you are now can be a threat to, or are a threat to, or a victim to, I'm sorry.
Yeah, this is probably one of the very few areas where we have a vendor partner that does our IT for us, and we're able to lay that cybersecurity and cyber insurance expense off on them. So that's helped, and as well, the seed to sale system, they have their coverage, they act as a third party. And then lastly, in the state of Florida, we're working with the Department of Health, so their registry is also protected. So it's probably the one area that, fortunately, and I'll knock on wood, is not of our greatest concern.
Yeah, for us, became a bigger concern when we launched the CBD line last fall, and we started selling direct to consumer. So
PCI.
now you're collecting consumer information. You're just a whole different level of risk, and certainly exposure there. So, but again, we're fortunate we've had some exceptional person leading our technology area, and you know, here too, I mean, you really need to have great practices. And then, fortunately, we choose to do it in-house, so we can't lay that off. But we try to do the next best thing and have the very best security practices, etc., and keep us from being exposed.
Yeah, a solid IT team or third-party IT contractor is a great foundation, and making sure employees are trained, because most of the claims we see are social engineering, which is just, it's essentially things like phishing, the phone call scams, anything where they trick the person over the phone. And, you know, those claims average, you know, $50,000 and under typically. And, you know, they're going for the weak point, which is someone who may not be properly trained. And in California, we've got delivery. So I can purchase my cannabis at home. I put in my information, put in my address, and I create an account with a dispensary. So now there's a dispensary that has my name, my address, my phone number, and that's all personal information. And in California, you know, laws vary state by state, but in California, there's some strict legal protections that we have. And then also, if you're a medical dispensary or medical facility, there's HIPAA issues, because that's also considered medical information and private information. And cyber liability is designed to help with that if you have to retain that risk yourself. And so, hey, David, I got another question from the audience. This one is, we've got someone asking, you know, what are the suggested limits on GL and workers' comp policies?
So as far as I can speak on GL, you know, the going policy right now, the limits for the policy is you really always want to start with a 1 million per occurrence, 2 million aggregate. When you're doing products and completed operations and you're tacking that onto your GL, you want that to match your aggregate. I know some carriers will post lower product limits, somewhere in the 100,000 to 300,000. I like to give those products to some of the smaller CBD companies because those premiums are more palatable to them. But really, GL policy should really start out at the 1-2 limit and then go up from there. And then if you need excess, you can always buy excess.
And then on the workers' comp, it's dictated by the state. So there's state mandated
really
limits.
Yeah, usually $500,000 will get you there.
Mm-hmm. Yeah, and each state's limits vary. California, it's $1 million, but your carrier will make those adjustments appropriately if you start to go into other states. So
absolutely,
you don't have to. It's very a little more set it, forget it for the policy language, since it's all state controlled, or the policy language is. And
So
on
somebody
that,
had a question in there about looking at workers' comp mid-year, and May brings up another topic that we came up with at Plus later on is, we had coverage here, coverage there, and then suddenly you're at a point you're growing as a company and you feel like every other month you got another insurance renewal to deal with, and you come to a point and say, hey, we've got to streamline this, make it more efficient. And then
you don't like dealing with insurance renewals every month?
Yeah, what should be the guiding, kind of like the one that the line in the sand, and what I think I heard from many people is the least flexible really is the workers' comp. I mean, it's kind of like an annual state agency. So you try to perhaps, if you're going to try to consolidate your premium, all your renewals onto one, probably most likely see if you can match up with the anniversary date on your workers' comp policy.
Mm-hmm.
And just to go back for GL just for one moment, is you always need to check that that leasing agreement that you have with your landlord, especially if you're renting out office space. Landlords typically will require $1 million in general liability insurance, just so they know that you have it. But also make sure that if you're a hemp CBD or if you're a cannabis company and you're just getting that GL policy to satisfy your landlord agreement, make sure that it covers cannabis, because if not, you're going to be in a very, very, very bad situation. And just getting that basic GL policy is never going to help you in the long run. You need to make sure that you are covered head to toe all around for cannabis, CBD, and hemp.
Yeah, you don't want to just buy a piece of paper. It's not going to help you.
Absolutely never.
And Caroline, if you're seeing that you're having large growth in your workers' comp, it's or if it looks like you're doing a lot of hiring, checking midterm to update the payroll, or even quarterly, whatever you can do to ease the impact on your cash flow, that's going to help you out. And with consolidating your policies all on one date, that can work out. Again, if you're concerned with cash flow issues, sometimes people will split their policies and have them renew 6 months apart. So half of them renew one date, half of them renew 6 months later. If they're concerned about cutting a big check for deposits, if you have to put a deposit down with the carrier.
The other thing I found interesting on limits is, then what if you're growing and now you decide to do joint ventures, or maybe you have a licensing deal and you're getting a deal with a big company, like we were going to do a deal with a big consumer product company. And of course, their idea of adequate coverage was about 10x what we thought it would be. So, no cookie cutter answer, but that could be a tough situation. You get
and I mean, I'm sure both you,
a very hidden cost to the agreement you didn't anticipate.
And I'm sure both you and Mike have talked about, negotiating those with contracts too. If someone's requesting, a $30 million umbrella, what do? You don't always just try to accept it. So what have you done in the past?
I think for us, we've just, wherever there's an insurance requirement, obviously we try our best to meet the requirement. But if the requirement was excessive to, what we can afford, we'd look elsewhere. it's just, I think it's dependent on what the exact scenario might be. But again, I think I mentioned that for us, our agent and broker is probably in the office about once to twice a week. So we're typically getting well in advance or out in front of some of these things before they become an issue. So I think that helps with some of the negotiations that take place because we are focused on getting to the bottom of it earlier versus later. This is not a 11th hour issue to tie up. It's really a concern to take care of up front.
Yeah, don't be afraid to push back if you feel like the insurance requirements are onerous. Have your broker get involved. I mean, I've written letters before where people have requested, I mean, I had someone request $20 million of a $20 million umbrella on a company with 5 employees. So I ended up writing a letter just to help support him saying, this is impossible. Like no carrier is going to issue this much coverage for a company that's making, you know, $750,000 or $1.2 million a year. And just trying to bring it back to reality on that. I've had a couple clients get cheeky and tell the contract holder if they want them to have that much, they need to help pay for it. And that, you know, it helps move the conversation along. So one of the other things with the carriers is we have a lot of compliance pieces. These cannabis carriers have a lot of compliance requests and a large sheet of items that they're requiring from you. So how do you handle that as a broker, as a business owner, business executive? Why don't we go ahead and hear from each of you on that?
First thing, especially if you're on the brokerage side, is just take a deep breath. You're only the manager. You're only the messenger between your carrier and your client in some regards, in that regard, especially when it has to come with compliance issues. But you really also want to be there, guide your client to make sure that they are compliant and they get the most out of their insurance coverage. I mean, we don't want to just be paying for a piece of paper and have it do nothing for us. We need to make sure that, you know, your compliance is always up to date, that you're doing the right things. And if the carrier has any problems with them, you need to make sure that you too can come to a compromise in making sure that these compliance issues are resolved so your coverage is still in place. It does take a lot of hand-holding sometimes, and there has to be a lot of honesty and transparent communication when you're trying to get these compliance issues resolved.
Yeah, I mean, I think we try to be, particularly on the operations side, try to be ahead of the curve, and we keep making upgrades to our facility. I mean, we look at, you know, what the insurance requirement might be, you know, that'd be a minimum. You know,
Yeah.
very likely our needs could be much more, but we certainly want to know what are they requiring. You know, for example, you know, one area may seem like a small area, but can become a pain, particularly, you know, if you're in a place where maybe, you know, let's say the technology coverage isn't as good or so, you know, and if somebody puts in a requirement that for your burglary camera and it's like, you know, so many frames per second or some kind of number, and, you know, which is really, you know, it's just way overkill for what's going to be required. So you try to be aware of those situations. You know, if there's anything that appears to be too onerous, and you know, and then with a good broker, you can get back to the insurance company and perhaps find a middle ground that could be more practical.
Yeah, for us, I look at compliance, whether it's with insurance or with banking. Most of it's really based on transparency. David, you mentioned it earlier. Super important for transparency, and then just being responsive back to the carrier. I find that that if we're able to answer the questions that they ask of us, and we're able to document that with what they've requested in short order, that a lot of that carrier concern from a compliance standpoint begins to lessen. So again, being, you know, very upfront, very forward thinking, anticipating what they might need. And then if you, for whatever reason, miss documenting that and getting the information back to them in a timely fashion seems to have thus far served us very well.
Yeah,
On top of,
Yep.
oh, I'm sorry, Danny.
No.
On top of being honest, and direct and having that sort of communication between, your carrier, your broker, and your client, that is also very important when handling and mitigating these claims. Another staying compliant. Another thing is that you need to stay focused on what your state regulatory board puts out, and also which could be sometimes maybe the same or the different in how your carrier enforces your policy. Your state may say one thing that can be focused on your label, like you can have this, this, and this on your labels for this state, and your carrier can say something entirely different. And I've seen that before, and it's a very difficult challenge, but it's a feasible challenge nonetheless. You just need to make sure that you have the transparent communication between those two parties and that they're in sync in order to be compliant.
Yeah, I mean, one of the good key starting points is having a designated person at your company to handle compliance issues and connect that person with the broker. If you've got vaults, DEA cages, alternative vaults, anything like that, there's different requirements from different carriers, poundage and fire ratings for your safes. So having one person who champions that is going to help make sure things don't slip through the cracks, because as a cannabis business owner, you have a million things to juggle between the state and your local municipality and your insurance and just actually trying to run the business. So if you can have one person champion that in your office, it's going to go a long way to keep everything together. And then as you grow, it becomes a team.
I think you also make sure you communicate well with the other parts of the company. I mean, insurance may also fall under finance, but you need to be in close contact with the operations, and perhaps even so close contact, for example, with the salespeople. I mean, we haven't talked much about, the automobile or some of that, but clearly, some vulnerable points could be with the salespeople, and they may not necessarily know they're doing anything that's kind of off limits for the policy. But
yeah, I mean, one simple compliance on the auto is if you have here, I've got a lot of clients that their employees use their own vehicles for delivery, and they have to submit proof of their own insurance, and you have to track that. And so having one person in charge of managing the fleet, making sure all the employees fill out the proper paperwork, you have copies of their motor vehicle reports, you have everything lined up. If you don't have a clear process when you only have a couple employees, it's going to be a headache when you have a couple hundred employees. So starting early when it seems like it's overkill is going to make it easy when you start to scale. And yeah, with that, we can talk about auto. I mean, auto is a hot topic. It's a pain point. Across all 50 states, it's been a big challenge for carriers, both in and out of cannabis. And so one of the things I know we've seen is a lot of challenges and concerns and ways of building policies and procedures for delivering product.
Yeah, I'm probably the only one that's in the delivery space, unless there's distribution that's taking place from John. But we have delivery and we have distribution to our different hubs. And obviously it's a very expensive piece of our business, but we've modeled in that expense as part of that delivery business. So it's an accepted expense that takes place, and we revisit it as often as we can. But it's a cost of doing business, and there's not a lot of wiggle room in there for the space. We have all of the tracking software that we use, obviously, for the purpose of delivering on time, giving patients notice in advance. So that same delivery software that we're using, whether it's our fleet software or whether it's software that's provided by the auto manufacturer, we have redundancy there, which has provided us with some breaks. We do the MVRs on all of our employees. We have 2 drivers, which is a state requirement for the state of Florida. in the trucks at all times. So they're able to, if one gets tired, another one can take over. So again, it's just looking at things and doing, the right things to mitigate that risk and to minimize the possibility of claims. And, hopefully that will serve us well when, our premium comes up next year.
Yeah, for us, we did not do our own distribution, but however, we did bring on Low Pain Point. We did, our marketing part decided that would be a good idea that we pick up a half dozen Mini Coopers and decorate them with the plus labels, and our sales team would, take them around, drive samples and visit dispensaries and park it outside the dispensary. But when it came, on the auto side, we were getting lumped in as if we were delivering product, as if we were picking up cash. And so, the rates were just off the wall. We were able to get it down some, but there too, it just seemed like another category where many of the typical carriers were not underwriting cannabis, and you're dealing with a much smaller population.
Yeah, we got a question from the audience asking, what are some common exclusions that you should be aware of as a business owner? So the obvious is a cannabis exclusion or a hemp exclusion, but outside of the obvious, I think is really where we want to dive in. David, you look like you got something you want to say.
Yeah, something that I've definitely dealt with many of my clients who, especially on the product side of things, especially when they're coming in manufacturing vaporizer cartridges. We've all seen this before in 2019 with SafeGate or however else you want to call it. Now more than ever, carriers are, putting out schedules of cartridges that you cannot use, and that you will be excluded if you fill your product with these cartridges. So that is definitely an exclusion I have seen on top of the cannabis exclusion. But other than that, I really haven't seen much else. Maybe your guys' experience has been different, but that's what I've seen, and that's what I'd like to address here.
I would just look at it this way. If they're acceptant of us as a cannabis company, they're pretty much acceptant of everything else. So that's kind of the rule of thumb. But to John's earlier point, the pool is so shallow when it comes to the number of carriers that are in the space. They've already assumed the risk. They know who the players are. And if they're, for whatever reason, find that they have significant claims, then they leave the space. So cannabis is the biggest one. If they can get past that hurdle, we're ready to roll.
I think one area could be on the D&O policy, and there can be all sorts. I mean, there's dozens of potential riders that can be put on there. And, somebody had looked at our policy and they said, oh, you should get all these different things. And then, Kerry kind of like, well, that's nice, but we're not doing it. You're a cannabis company. So
I would say there's some limitations that you'd want to be wary of. There's a couple carriers out there that will write cannabis businesses, but they have some bodily injury and some intoxication type language that really shifts the burden on the claim from you getting a claim to how the claim is worded against you. Right. And at that point, my conversation with my clients, because we won't work with those carriers, is you don't want your claim to be dependent upon the language of the person filing a claim against you. It really shifts that protection away. We see limitations. Cultivators, I get a lot of requests from cultivators wanting to do crop coverage. And with that, it's just being wary. It's, there's not going to be coverage for fungus or mold. It's really basic coverage. It's, fire, theft, water damage, things like that. You're not going to see it for very common types of problems that growers can face. I would say the biggest thing, though, is making sure you're aware of the limitations and things like protective safeguards. When we had issues with the riots, I reminded my clients that carriers had specific safeguards, that if those weren't met, coverage was excluded. So double check that the building's locked, double check that the vault's locked, double check the cameras are running, double check everything on this one spreadsheet they provide, where they say if these things you've said you have as security are not operating right now, we will not provide any coverage. So you want to really make sure that that policy is broken out, have a sit down with the broker, look through it, and just be wary of those limitations that can carve coverage back. Another common one we see is inventory left on display for a dispensary. And we work with our clients where they typically leave the less valuable or lower profit margin products out if it's too much time to put it away, and accept the coverage restrictions and reductions there, and make sure the high value products are put away in safes every night if that's the requirement from the carrier, which it pretty much is across the board.
Yeah, I would say the last thing with regard to coverages in one area that we're very fortunate, we have a great chief legal officer. And so insurance, I think for John and I, it's first and foremost, it's a business decision that we're making. And that decision, again, is based on expense versus risk. But then once we make that determination, at least for us, I'm sure John is very much the same, we have a set of legal eyes that go over each one of these documents, and he will come back with a list of items which he believes to be risk. And he actually sat on the other side of the table. So he was dealing with class action suits. He was dealing with product liability issues. And so he's seen what we would be facing should we not cover our bases. So I think having a set of legal eyes is uber important for insurance coverages.
Absolutely. And then we've got another question here in the chat asking, do you foresee more underwriters entering the space, and is more competition going to hopefully yield better premiums? David, I'll go ahead and let you go with that one.
I'm sorry, can you say that again?
Yeah, so the question is, do we foresee more underwriters or more carriers entering this market? And are we looking at a net reduction in premium as we have more competitors?
To answer your second question, the answer will be most likely yes. To answer your first question, that's really a little hard to tell. Let's check in December after the election, and let's see if cannabis becomes federally regulated. Once cannabis becomes federally regulated, you'll see a lot of these name brand A-rated carriers removing their federal restrictions and start writing cannabis insurance, especially for the pedestrian market and the small commercial market as well. I would say on all lines. But at this point in time, in early August, late July, really don't have an answer for that first question yet.
On the West Coast, California, Nevada, Arizona, Washington, Oregon, we do have carriers tiptoeing in. So we are seeing new ones step in, picking safer lines like workers' comp, where they can maybe use a carrier that they have that's only registered in that state. And it's really market driven. D&O carriers are all terrified with all these claims, so it's going to be hard. To echo David's point, if this goes federally legal and you can have a bank account, you're going to see a shift in the carriers. Maybe not all of them, but you will see a huge shift because they've got their own regulations they have to stick to, and being a multi-state business, they've got concerns with the federal law. But you do see carriers creeping in, testing the waters, and yeah, it has led to some more competition. We're not seeing it in as many areas as we'd like, but it is happening.
Yeah, and just another thing, especially with, things like crop and D&O and workers' comp, where those carriers are still, kind of tiptoeing in slowly and fewer by the numbers. You can also, especially when you're looking for your crop coverage, something that is now in its infancy and I think could really change the whole game would be something like parametric insurance, where like let's say you had a named storm in your area and it came down, but you needed to pay, you can use something like parametric insurance, which would have satellite tracking of that named storm and would pay out if it actually happened, and not actually relying on crop data or actuarial data or things like that. It's something that's more real time and with more applied science.
Did we lose David? Oh, no. Who did we lose? Oh, we lost John.
Yeah, we lost John.
Okay, and then, perfect, welcome back. Let's see. So on that, I was just looking to see, it looks like we've gone through this one. One of the other pieces, when we briefly talked on this, was an operating risk and the best practices of not mixing your compliance risk with financial risk. And that's, I know, an area for Mike and John to really dive into on that.
The question again was on compliance risk versus?
The reasons why you wouldn't want to mix your compliance risks with your financial risks.
Well, I think that from a compliance standpoint, you're either going to be compliant or you're not compliant. So I don't think that there's a workaround to that piece. If the coverage is required and the compliance surrounding that coverage is required, then the cost associated with it really cannot be limited. It just happens, it is what it is. So I'm not sure if that's the answer to the question, but that's the way that I would probably initially approach it. And then it would just depend on the number of carriers and what the requirements would be.
Yeah, way I look at, well, perhaps maybe more as you're in a business with high risk in the cannabis world. So do you want to take on financial risk and may self-insure or not get coverage? You know, you hate to spend the money, but given the nature of the business, you may want to be more conservative on your insurance and perhaps take on insurance sooner or get more coverage than you might otherwise, given the risk of the business that you're in.
Mm-hmm.
Yeah, I agree though, but you certainly can't play with the compliance risk. And yeah, it may sound, like motherhood and apple pie, but I would say we actually, we have a great chief risk officer, and we went out and I think looked at 50 different areas, and we get independent reviews, and you're not going to score 100 on all of them. I mean, reality is you'd be out of business if you, fully did everything to the nth degree. So you want to be very fully compliant, but you're not necessarily going out to get Six Sigma types of awards either, though.
Okay, perfect. And then last question is for Mike and John is when should I consider D&O or other management lines of insurance?
Well, I think when are you adding a board? Maybe you're starting out with an advisory board and they're not really taking on any legal liability. But I think once you get a formal board, then particularly you need to get some D&O. But a big thing we hadn't mentioned so much with D&O is that a D&O policy also can help you attract good board members. I mean, I'm looking at a venture outside of cannabis, and they do not have D&O insurance, and that may be a hindrance from a couple of us deciding to get on the board.
Yeah, I echo John's comments there. From the standpoint of D&O, especially with a publicly traded company, it's not really a question. It's something that we need to do. So that goes first, and then if there's side A coverage, to extend that coverage out because the costs are a little bit better for either board members or officers of the business, then that's an option as well. But I would, I think in echoing what our agent and broker has said in the past, be as inclusive as you can up front for your board members and officers to make sure that the coverage is spread as deeply as it possibly can be, because you're not going to get that opportunity to go back later and maybe include some of those individuals, and then therefore the coverage is not extended to them. So working with your advisor, your agent, for that D&O policy and understanding what your goals are and needs are is probably a very good exercise to happen early in the evolution of the business if it's so called for.
Perfect. Thank you very much. And with that, it looks like we are going to wrap up. So thank you very much, everybody, for your time. I saw a request, David, there was a request for you to put your contact information in the chat. So I've gone ahead and shared mine as well. So if you want to, feel free to post yours in there too. That way people can have it. And with that, we'll hand everything over. Thank you very much, everybody, for your time, and thank you for joining us.
Yeah, thank you guys. That was a great panel. If anybody has any last closing thoughts, feel free to send them. But please put your information in the chat. Make sure everybody has that. We've got some exciting events scheduled for August. We're going to be having a discussion on the 13th on embracing diversity, equity, and inclusion. Roz McCarthy's helped us set up a great panel with Rep. Chevron Jones, former NFL player Marvin Washington, the Illinois Cannabis Czar Toy Hutchinson, Chris Nani, who's a co-author and creator of Understanding Social Equity Guide, Melik Dexter from Let's Re-Up. So, and then we're gonna have another discussion on elections. There may be either a debate or we're just gonna be talking about the upcoming elections, primaries, as well as the November elections or the elections upcoming whenever they may happen. So, thank you guys once again, and we look forward to discussing more on this soon. Welcome
Take care,
back,
everybody.
Thanks so
everyone.
much.
Thank you.
All right.